In a survey of 72 monetary authorities, 43% said they expected their gold reserves to increase. It doesn't sound a lot, set 43%, but it's up from 29% a year earlier and the highest figure in 8 years of data collected by the World Gold Council. Wednesday, June 18th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, today we're going to look at how the dollar is being abandoned. Yes, it's not me just saying that. It's even going mainstream. And we're also going to look at how the central banks are hoarding gold, continuing to hoard gold. And it's been happening, of course, since 2022. For those of you who have been listening to this channel and others, we've been talking about that. Before we start with that, we're going to look at some current events, a few things that are happening that are important, especially here in the UK, where I am. We had what the mainstream calls the inflation numbers, which is really the consumer price index numbers, which measure rises in prices. And as most of you by now hopefully know from listening to my channel, CPI is not inflation. CPI is the consequence of inflation. And inflation, of course, is when the state, via its banking system and the central bank, increase the amount of money and credit or currency and credit out of thin air faster than the economy grows. And yes, the simple law of supply and demand, and the currency loses purchasing power. So as you can see from this M3 chart for the UK, there was a huge acceleration after 2020. I don't have to tell you why that happened. And yes, it's slowed down, but it's picking up again. And believe me, they're not going to stop allowing that to happen. So what we have is financial repression. And we've had today the CPI numbers, as I said, or inflation numbers, as they call it. And they're not even that real. They measure these prices, but they're highly tinkered with. But let's go with what they tell us. The Office for National Statistics, while the CPI came out at 3.4% year on year, the previous month it was growing at 3.5%. So it's dropped a little bit, but the expectation from the economists on Wall Street and in the City of London was for a drop to 3.3%. So that's not really positive for things. And then you have the RPI, which used to be the measure, the retail price index, which is really a lot more relevant for the average worker. And that's what they used to use as the inflation number prior to 1997. Well, that's still running at 4.3%, and it was expected at 4.2%. And what I want to do now is show you this rule of 72. What's the rule of 72? Well, Google says it's a quick way to estimate how long it takes for an investment to double in value. So you can also do how long, you can use this to see how long the currency halves in value, right? So all you do, you take 72 and then divide it by the rate of growth, right? Let's say, let's take the UK CPI, which is now growing at 3.4%. So you take 72, and I got my Hewlett-Packard calculator here, and you divide it by 3.4, and you get 21.1 years. So that means CPI will double in 21 years. So that means your currency will halve in 21 years. So what would be the best rate of price rises? Well, I think it would come as a result of sound money, of money that they can't inflate out of thin air. And we had that for about 100 years after the Napoleonic Wars, the gold standard, where money was a fixed weight of gold and silver, and the CPI only actually dropped 0.1 per annum during that whole century up until World War I. So let's take the RPI 72, which is a much more indicative measure for what's going on in terms of price rises. Let's take 72 and divide it by 4.3. Well, we get 16 and 3/4 years. So is it any wonder that people are becoming less and less prosperous? They're having a much tougher time. How can I say? Yeah, earning the basic necessities of life. They have nothing left at the end of the month for leisure or for anything else. All their income is going into, to surviving. And some people, of course, because of the way the welfare state is run, they've given up working because it's not worth it. And sometimes I don't blame them, but it's not something I would do, of course. And why is that? Well, because I'm too proud. And I think the best thing in life is to try to be be self-reliant and sovereign. Yeah, I know it's hard, but it can be done. Believe me, if I can do it, anyone can do it. So I would speculate to say that the CPI is really running around 5%, because I made a video in July of 2022, and I'm going to put it up here in the cards right now, where I found out that they changed the methodology, and the average CPI dropped by about 1% over the last 50, well, even more, 70, 80 years. And that's how they do it. They lie to you about their measures, and they keep inflating. And why do they do that? Well, because it helps the political class enrich itself, and it helps the City of London and Wall Street enrich themselves, because they can always protect themselves against the inflation because they have a lot of assets. The people who suffer, of course, are the general public, and it destroys the middle class as well. So let's say we had 5%, which I think is really what we have. Take 72 divided by 5, that's 14 and a half years. So, and I would say we've been having that at least since 2020. So in another 9 years or so, it's going to be even worse, because they're going to do everything to tinker with these numbers. And it's not just happening here in the UK, it's happening everywhere around the world, because that's what governments do. They're not after your own interests. But now let's go to the dollar. And of course, we've been saying here on the channel since 2017 that all the infrastructure, a lot of the moves by China, Russia, was to prepare for the death of the petrodollar. At the time, I made videos about that, and people were saying a year or two later, well, the petrodollar is still around. What are you talking about? Well, I always said that it was going to be a long process, because the petrodollar, the analogy is that it's a super tanker, oil tanker, those that go through the Strait of Hormuz. And it's not like a Boston whaler where you can maneuver around really quickly. So, but it's happening. And now it's mainstream media. It's not just on Monaco64 on YouTube. So let's have a quick look here. Well, Bloomberg UK, June 16th, many exporters no longer want dollars. U.S. bank executive says. So let's have a quick look at this article just to get the idea of what's going on. It says when Paula Cummings, the head of currency sales for U.S. Bancorp, talks to U.S. importers, she increasingly hears the same message. Therefore, foreign counterparties no longer want to be paid in dollars. Instead, they ask for settlement in euros, Chinese renminbi, the Mexican peso, the Canadian dollar, looking to limit their exposure to further swings in the greenback. A lot of clients previously were reluctant because dollars were sacred in the eyes of the supplier, Cummings said. Now the vibe from overseas vendors seems to be just give us our currency. While the dollar saw a brief boost amid the turmoil in the Middle East, the currency is still about 8% lower this year against a basket of other currencies. And yes, yeah, that's what's going on. It's actually happening now. It's not just central banks getting out of dollar reserves and accumulating gold. It's exporters from other countries telling importers in the US, we don't want your fiat dollar. We want our own currencies. You go and earn our currencies. So, yeah, and as I said, the central banks are continuing to hoard gold. This is from yesterday on Bloomberg again. More central banks than ever plan to build up their gold hoards. Again, let's go quickly through this article. A record share of the world's central banks plan to accumulate more gold over the next 12 months, drawn by bullion's performance during times of crisis and protection against inflation. Well, I don't think central banks care much about price. They care about tonnage, how much they have. And I think one of the reasons they are buying a lot of gold is to get away from the politicizing, of the U.S. dollar. And of course, also the fact that the debt is growing so quickly. America is still running huge deficits. It's running also huge current account deficits, current trade deficits. And I know President Trump is trying to rectify that through tariffs, but that's not going to be easy. And as I speak here, we're only $8 billion short of $37 trillion, the national debt. But let's continue with that article here. In a survey of 72 monetary authorities, 43% said they expected their gold reserves to increase. It doesn't sound a lot, set 43%, but it's up from 29% a year earlier and the highest figure in 8 years of data collected by the World Gold Council and YouGov. None anticipated a decline. Wow. None, not even the other 57% didn't anticipate a decline. Central banks have been one of the most important drivers of a long-running gold rally that has seen prices double since late 2022. The pace of buying doubled after the invasion of Ukraine, when the freezing of much of Russia's foreign currency holdings highlighted the appeal of bullion as a reserve asset. The other thing I would say is that the current trade war, which of course right now has been overshadowed by the Iran-Iraq war. No, Iran-Israel. I always get confused with those. Iran-Israel war. Yeah, that's triggered. That's been kind of like the Russia-Ukraine situation in 2022. This is going to trigger a lot more moving away from the dollar. And why do I say that? Well, because I don't want to get too political here. I don't support any side. I'm like Switzerland. I try to support my side. But from what I see, Yeah, there were negotiations going on. There was supposed to be another round this past Sunday, and all of a sudden, the Israelis attacked Tehran. What's that got to do with the dollar? Well, I don't know. It just doesn't seem plausible that the U.S. would give Israel the go-ahead without to bomb Iran. They would know. So why would they keep talking to the Iranians about negotiating? So what I'm trying to say here, who's going to trust the United States now? I don't know. I mean, maybe I'm wrong, but I think that doesn't help the dollar either. So there you go. Yeah, now exporters from other countries, they don't want dollars, and I think that's huge. What's that going to do to the everyday American? Well, things are going to get worse. It's going to become more like the UK. After World War II, the UK went in decline. It's still quite a wealthy country, but things became more expensive. Why? Well, because people didn't need pound sterling as much, and it's going to be the same thing for the dollar. It's going to lose value against relative to other currencies, and also relative to things, right? Hard assets, commodities. Let's quickly look at where the markets are this morning. Yesterday, of course, silver did really well, and it's still doing well. It's 7:37 a.m. London time. We're at 37, yes, 37.20, up about 9 cents. High's been 32. And I think the key resistance now on the spot price here is 37.50. And there isn't really that much resistance after that up until like 40.44. So it's looking very good. Yes, it's outperforming gold, but that's normal because it has a lot of catching up to do. Gold is at 33.83. It's down about 5. High's been 3,400. Low's been 70. In terms of the war situation, I see that Trump is calling for Iran's unconditional surrender. I don't think they're going to listen to Trump, the Iranians. Yeah, so I wouldn't put much credibility on that demand from Trump. I think things are going to get worse. And I'm hearing a lot that the U.S. could join in and help Israel. What that tells me is that Israel is in trouble. Why would they need the U.S. if they're doing so well? But crude oil picked up a little bit in the last 12 hours or so. WTI is trading around 73. It's down a little bit, down 0.2%. So we'll keep an eye on that. That's a really good indicator to keep an eye on to see how the tension is in the Middle East between Iran and Israel. And why is that? Well, because 20% of the world's oil flows through the Strait of Hormuz, which is controlled by Iran. And that's one of their trump cards, so to speak. They could shut down that strait and create havoc in the Western economy. Why haven't they done it yet? Well, because you don't use your ace or your trump card willy-nilly. You use it when you really need it. So what else is going on? Well, currencies are fairly quiet. The dollar is a little weaker, but the dollar rose quite a bit yesterday against the pound especially, and the euro as well. And today it's rebounding a little bit. The stock market is slightly higher here, the futures, but nothing to write home about. And yeah, the bond market, the 10-year yield is around 441. It's up a couple of basis points, but again, still very stable, the markets, considering what's going on. So with that, I'm going to wish you all a very good day. Take care. Bye.